Hi friends, Sid here from InformedTrades.com. Today's Friday, June 6th, 2014. Time for our daily Forex chart review. Basically, in these sessions, I share the trades I'm placing, adjustments to existing positions that I have on in the markets, all as a part of helping traders learn. If any of the information I'm presenting to you is unfamiliar, we have a large archive of learning material over at InformedTrades.com. Check it out, register as a member, share your knowledge, ask questions. We can all learn together. The information on Informed Trades covers a lot of styles of trading beyond the price action swing trading approach that I have here. Covers other markets, so check it out, and we can all sort of learn and trade together. Okay, let's start with a look at the charts. Okay. First, let's start up with gold, as I generally like to do. Gold has rallied a bit, so it looks like this could be this rectangle right here. And actually, so we broke out of this range here, and if we get back to 1280, I still think that could bring in a bunch of bears, excuse me. So I'd be a little cautious there. But this I think is pretty interesting. This right here. I think we had a little bit of a range here. Definitely some exhaustion. Small candlesticks. That's sort of the rule. Small candlesticks precede big candlesticks. So you enter on the small, you make your money on the big candles. That idea definitely played out here. So let's see if we can rally and get back to 1280. I still think that bears could step in and push it down to 1180. Of course, in terms of what I'm actually with my account, I'm still looking to buy. I am buying. I recently bought the other day. And I'm buying for the long term between 1180 and 1280. I think price will ultimately set new highs above what we reached in 2011. Okay, so that's gold. Let's take a look at now in terms of the pairs I have on at the moment, adjustments I made. One thing I did today was the Aussie Dollar Yen. I had entered here. This position was going great for me. Pretty much, only a couple down days, a few down days here. Now we're here. Now this is actually a support level, and I'll just draw that in here. Actually, I'll move this down. So right here, where we're at. So you can see this level was tested here in October of 2013. We also reversed here, May of 2014. And now we're forming a hanging man pattern basically at this resistance level. So I took half off, and so that was actually the partial take profit occurred today at this. Based on the hanging man, I thought we could be reversing. My stop is at a break even for the remaining half, and I'll be holding on for a big move in the yen outside of this. So I took half off. The rest of the trade has been de-risked. The other trade I have on with the Australian dollar is this one right here. Now, Aussie dollar, I got in long here. I moved my stop to break even. So my stop in, you see the stop loss level, entry level, same point. Price did close above this dashed orange line, which was the resistance level I was looking to watch. So I moved it to break even. No real action here today. We are seeing potential reversal in the Australian dollar, which impacted and helped me decide to place another order today. Just bear that in mind. We'll get to that in a moment. But Australian dollar, we saw it on the yen, and we're seeing this hammer or doji pattern on the Australian dollar, which suggests that some of that bullish steam might be running out, at least for the time being. So that's Aussie dollar and Aussie yen. Aussie yen I took half off. Aussie dollars at break even. Both those trades are currently going well for me. Pound dollar. Now this order got filled yesterday also, and it worked out really well for me. Price or 2 days ago, excuse me. I got filled on this spike right here on June 4th. Yesterday, big candle. And why did I enter? We were at a trend line at this dashed purple line here, at a 61% retracement from this swing low to this swing high. And the 50-simple moving average, which is trading use having a little difficulty plotting moving averages, is also right here also. And this is a horizontal support level going back to here, February, again in March, here in mid-May. So this level was very established, a lot of confluence. I entered here, big candle up, closed above this resistance level here, which was established right here, minor resistance going back to April, actually also here as well in February. So I moved my stop here to break even. This trade has been de-risked. Let's see. We're retracing a little bit today. Let's see what happens. Either way, that trade has been de-risked. I'm still holding on for a target profit of 69.85. This is pound dollar. Next up, dollar Canada. Now this is one trade that has not been de-risked, and I currently entered here, based on moving averages are sloping down. We're at a 61.8 Fibonacci retracement, and this is a support level going back to here, February 18th, as well as here, May 21st. So I thought there were again confluence signs here on dollar Canada. This is currently a little out of the money. Price to reality today. This is not really favorable price action. I was hoping that yesterday's candle would signal the onset of a true reversal. So we'll see. I'm not making any adjustments. My stop is still here, and that's sort of where I'm at on dollar Canada. This is one trade where I'm live, and the risk has not been, or the trade has not been de-risked. So Aussie dollar, Aussie yen, my stop is at break even. Same with pound dollar, dollar Canada, not so much. So if my stop gets hit, I will lose money on this one. Same goes for a new order I placed this morning, and it just got filled, which is long pound Australian dollar. Let's go through the logic here. One, we have a pattern of higher lows, right? This low's higher, this low's higher. We also have a little bit of a tentative trend line here. So price is at this trend line. Price is right around the 60% retracement from this swing low to this swing high. And we have a doji candle forming on today's candle. Also, this is the Australian dollar. So the momentum in the Australian dollar that we saw in Aussie dollar and Aussie yen looks like it's beginning to decline. Remember, if you look at, let's go back to the Aussie dollar for a second. You see this reversal candlestick. Aussie yen also has a reversal candlestick forming at a resistance level. So it looks like the Australian dollar could be pausing a bit. I didn't close out my Aussie dollar or Aussie yen position. Well, I did take half off on Aussie yen. But rather with pound dollar, I'm interested in going long this, which is basically long the pound and short the Australian dollar, as a way of playing the turning point that could be going on in the Australian dollar. And I thought the technical setup on here was favorable, was one that I liked. So that's about it. This is my one new trade, new order that I put on for today. The order got filled, so now it's a live trade. The trade is all documented in this video and my trade. So if you have any questions, check it, ask over there. And that's about it. Best of luck. Best of luck in your trade, and we'll